liquidity conditions were turning and they bottomed out. And that gave me the signal to start getting more bullish on assets. And it's continued to play out that way. And it's kind of, I think had people have heard me say, well, Solana's going to be up 200% this year and, Bitcoin up 100%. At the bottom of that bear market, nobody believe you. Like nobody believes that NFTs will go up again, ever. It's all the same. It's all the same cycle. And so, I've got a bunch of charts as well. We can show them later about some of this liquidity stuff so I can update people. I thought we would have had a negative GDP quarter by now, but we haven't. But the market's priced it all in last year. I mean, crypto was down 80% and the NASDAQ was down 40 or 38 or whatever it was. We priced in a recession because it seems that markets are now just trading off the liquidity cycle, which tends to be forward leading on the economy. And so I still think that Q4 is a recession and Q1 is probably a recession quarters. You can kind of feel it everywhere. I say this often, find me one person who in their business has not seen sales decline or laying off people. I don't know anybody. It's not just crypto. It's across every company. So, it just feels like there's a lag to that data that's to come. And I know we probably end up with some ludicrous blockbuster GDP number for last quarter, but I don't think it's about last quarter. I think it's like where we are today. You can see it, the oil market can't quite get out of its own way. And that tells you there's a demand problem. If we were really strong, we'd see a strong copper market. We're not. There's a lot of signals to me to say, things are much weaker than the headlines are expecting. And weak things, but talk about weak things. The single most important thing for everybody to watch on the screen is the BKX, the banking index in the US, the ETF there. I mean, that is close to, where are we today? 71, 74. We're getting close to breaking the low. And that will not stop until the cowbell comes. It's as simple as that. And that's why I think crypto is picking up, crypto's picking up. The more this goes down, the more crypto goes up. Because the only answer to this is cowbell. You have to add stimulus here. Now, whether that's firstly stopping QT, that would be a good help, or injecting money into the banking system, which they did last time around in April, May. So look, a few more days and we're below those May lows, and that's where we got a panic situation last time. I'm very bullish on NASDAQ and S&P for the same reasons. And again, I'll show you some charts in a sec, but I think that we've just had a very nice correction in those. I mean, the NASDAQ's still up 33% year to date. We had a hell of a year. It was up 50% at one point, which is the best start to a year, I think in NASDAQ history. So, usually Q4 seasonally is very, very strong. I've been writing about it in Global Macro Investor, and I call it the banana zone because the stimulus period comes and everything goes vertical for a bit. And I do think that's the most likely outcome. It doesn't feel like it today because, the NASDAQ's down 2%. But again, I look at a lot of technicals and we're kind of counting down to the DMARC 9s and 13s that tend to give us the bottoms. The sentiment, everyone's super bearish equities. They have been all the way up. And so, any change in any picture here, like the Bank of Japan coming in to intervene, we're seeing the Chinese stimulus coming. So these things are big.
ARK Invest and 21 Shares are teaming up to unleash not one, not two, but 5 brand spanking new crypto ETFs next week. Brace yourselves for the ARK 21 Shares Active Bitcoin Ethereum Strategy ETF and the Active On-Chain Bitcoin Strategy ETF, among others. These are good grandma's ETFs. They're actively managed, ready to shake things up in the crypto investment game. Why is this a big deal? Well, while we're all crossing our fingers for the SEC's nod on spot Bitcoin and other ETFs, ARK Invest and 21 Shares are like, why wait? They're taking a leap of faith in launching these babies, potentially reshaping the crypto ETF landscape. It's like they're saying, move over boring ETFs. It's time for something fresh and exciting. Picture this. ARK Invest and 21 Shares dropping 5 innovative funds into the crypto arena like a McDrop. Scheduled to hit the scene next Tuesday and Wednesday, these funds are diving into the world of Bitcoin futures, Ether futures, and even a mix of both. It's like a crypto buffet offering a variety of flavors for every investor's taste. Now, I know what you're thinking. Why should I care? Well, these ETFs are a game changer, entering the market with an active management approach. Forget the mundane, these ETFs are here to stand out. The RK21 shares active Bitcoin Ethereum strategy ETF, for instance, plans to dance with both BTC and ETH futures, using historical data and fundamental analysis to outshine the direct Bitcoin holding game. But hey, they're not stopping there. Despite wading into a pool of existing crypto ETFs, ARK Invest and 21 shares are confident they've got what it takes to stand out. How? By flexing their muscles, both in traditional finance and decentralized finance, DeFi. They're on a mission to cater to everyone from crypto newbies to seasoned holders with a robust suite of offerings. Hold up though, not everyone's throwing confetti and doing the crypto cha-cha. Nina Mishra from Zacks Investment Research is sounding a cautionary note. While we're all eagerly awaiting spot ETFs, these new funds are stepping onto a stage where success isn't guaranteed. It's like they're about to perform, but will the audience cheer or give them the silent treatment? And here's the cherry on top. The SEC is in the spotlight, about to decide the fate of spot Bitcoin ETFs by January 10. Will they be the heroes approving the ETFs, or will they play the villain, leaving us in suspense? The crypto community is on the edge of its seat, eagerly watching the regulatory drama unfold. But wait, there's more. Euro-Pacific Capital CEO Peter Schiff is ringing alarm bells, predicting a market crash as Bitcoin approaches $38,000. He's like the town crier, warning us of impending doom as the ETF contenders brace for potential approval. Is he the voice of reason, or are we in for another round of crypto drama? Only time will tell. So buckle up, crypto street investors. The stage is set, the actors are ready, and the script is a roller coaster of excitement, uncertainty, and maybe even a few plot twists. Get ready for the show of the year in the crypto world. Let's continue our enlightening discussion with Raoul Pal.
I haven't gone through this whole presentation before, so I'm going to quickly go through it. I don't know the order it's in, but basically, to understand the game we're playing is GDP is driven by population growth, productivity growth, and debt growth. The issue is population growth, that's the US, been declining. Working age population is declining. Productivity is declining. And debt has tapped out. That's debt to GDP. So we're like at enormous levels of total debt to GDP. We've got no engines of growth. GDP is what pays the bills. It was what pays the interest on the debt. And trend rate of growth has been falling over time. So this is the big picture view. 2008, some magic happened. The magic was the debt jubilee. The debt jubilee was when the world blew up, when every major economy started to get to 100% of GDP in debt at government level, ignoring the private sector level. Basically, there's not enough GDP to pay for all of the interest payments on the debt. And what they did was this debt jubilee, which was like, you don't need to pay your interest. It's now zero, right? Everybody got given that gift in 2008, 9, 10, 11, 12, 13, 14, 15. So that whole period, everybody reset all of their debts to a 3 to 5 year debt cycle. And that funding cycle is now the thing that drives everything. And I'll show you some more on this. And this is only a part of the everything code, but it's part of this whole idea. It also happens to correspond with the Bitcoin halving cycle, and it corresponds with the US election cycle. They're all the same thing. Everything is one cycle right now. And if you understand that cycle, you kind of understand everything. And it will get broken at some point, but to break that cycle needs population growth to change, productivity growth to change, or debt growth to change. If not, we're in this cycle. The population growth is what I think does change because AI and robots are productive units that basically replace people in the workforce, and they're now and will become infinitely scalable. It's not yet, but by 2030, 2032, something like that, this is infinitely scalable people in terms of productive units. That changes the entire equation for mankind, changes productivity, everything else. So going on to the next chart, the cyclicality here is here's the ISM, and the ISM 22 months ago, is the ISM today inverted. It's because everything has become this incredible cyclicality, which tells us we're at the bottom of the business cycle right now, the recession point, and we're starting to go higher. Now, ISM leads GDP by a quarter because it's monthly and GDP is quarterly. And so what we're saying is around a month ago, or 2 months ago, we were at the low of the business cycle, which is why we should see a recessionary quarter. Our weekly leading ISM index also pointing to the business cycle higher, which is the picture that I'm trying to get across for 2024, which is recovering economy, falling inflation, is really what is known as macro summer and crypto summer. That is the holy grail. That is the one where you start to make the real money. And that's coming, and we're very close to it. Usually, you need the ISM to cross that back up through 50 for that to be confirmed, and that's when things start to get a little crazy. So the next chart is, okay, this is this rolling debt cycle. You can see pretty much all of the debt in the US matures between 1 year and 5 years. And that's the issue. We have to keep rolling this debt and paying the interest on it. And we've just had a massive rise in interest rates, and the massive rise in interest rates means they have to issue more bonds to make the payments on the interest payments as they come up to mature. We've got this maturity wall of something like $12 trillion of debt that has to be rolled over the next 18 months or so. That there is no way for the markets to absorb it. The government debt to GDP, as I said, when it got to over 100% to GDP, then there's not enough GDP to pay that debt. Considering the trend rate of interest growth, growth has been about 1.75%, and interest rates are currently at 5%. How the hell do you pay for that? And don't forget the private sector's in debt. What we had for a long time was what I refer to as real rates, which is 5-year yields minus GDP growth. They were negative for a period of time. They've been trending lower, currently positive, and that's restriction rate right now. I know this is going to be a bit complicated for some people, but you guys will understand what I'm talking about. The big thing is, okay, how the hell do you pay all this interest? How do you roll all this debt? And the answer is this chart. I think I was the only person in the world to find this chart, which was the Fed balance sheet basically lags the interest payments by 36 months. So the previous interest payments from the last cycle get shunted onto the balance sheet and monetized. This is debasement of currency, pure and simple. And this is, in fact, all of the central banks, the UK, the US, the EU, Japan, Australia, everywhere is exactly the same. They're all monetizing the interest payments on their debt. When we zoom in, we are at this point in the cycle. Q4 is the start of the increase in the need to pay interest. If they don't, they'll lose control of the bond market, which we're already seeing, right? This is the first blip up of the interest payments, and we're already seeing, bond yields can't get away from 5%. And if we're not careful, it'll be at 5.5% and 6% in this panic because we've got all of this stuff to roll. So we're getting to the end game. The banks are telling us it's the end game.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.